Depending on the outcome of the midterms, would it change the composition of foreign policy in the U.S.? So does it influence directly trade, or does it influence directly taxes?
So the consensus expectation is that the Democrats take the House.
Yeah.
And with that, we neither go forward nor we go back. So we don't go forward on further tax cuts, but neither do we go back on what has been done before. And I think the market has priced that in and understands it. The big surprise if the consensus expectation doesn't materialize, and then I suspect you'll see huge swings in the market.
Right. So if both, the House and the Senate stays Republican, what does that mean?
So if both the House and the Senate stay Republican, suddenly the market will say, wow, there's scope for further tax cuts, which markets like, especially in the short term. And you'll see quite a reaction there, plus in the bond market as well.
Right.
So you'll see higher stock prices, higher yields, and
dollar positive,
and stronger dollar.
Does it mean the trade wars will actually be ratcheted about?
So the trade war is less of the issue because that really is up to the executive branch. So people are focusing. I think the four issues they're looking at, in addition to trade, which is less, is what is the scope for tax cuts? What is the scope for deregulation? And the third is infrastructure, with trade being the fourth, right? And the one upside of a divided House is that maybe, a divided Congress is that maybe, with a big M, capital M, maybe you can get agreement on infrastructure because both parties have talked to the importance of infrastructure.
Okay, but so 2020 is the one year that everybody says, watch out, because we could see, a cyclical downturn, you could see the end of the tax cuts, we could see a possible downturn or even a recession. So actually, if Republicans hold on to both things, would that make less likely that 2020 is an ugly year?
Yeah, like any other country right now, the major challenge facing the U.S. is to hand off from cyclical sources of growth to structural and secular ones. So for Euro, for example, that handoff has failed. And what are we seeing? We're seeing the cyclical influence decline and no handoff happen at all. In the US, you've had somewhat of a handoff. And the hope is you can reinforce that handoff. And how do you reinforce that handoff? Infrastructure would be a way of doing that. So it's really important that you get further policy progress. Otherwise, that handoff will be really challenged.
If the Democrats get the House and the Senate, what does that mean for the markets?
So if the Democrats get both houses of Congress, I think you will see investigations. You will see talk of impeachment. You will see talk of going backwards on certain of the economic legislations. And I think the markets will take that badly if it happens.
Both treasuries and dollar?
Yes. That would be an expectation that we not only do get gridlock, but we get major fireworks over the next 2 years. That's why, the market is comfortable with what is the consensus around the country of one house going Democratic, but any of the other extreme would cause major moves.
What's your take on some of these Southeast Asian economies? So they also have to contend with, monetary policy, so the Fed, dollar dynamics, they have potential outflows, and of course trade concerns.
Correct.
So is it uglier if you're a new economy than you're a developed economy?
So the contrast in Asia is amazing, because if you look at Asia on a standalone basis, it would end up being quite positive. But Asia lives in a neighborhood where conditions have turned against it. You've mentioned it. Trade, stronger dollar, at some point higher oil prices, market volatility, tightening financial conditions. That's a really hard combination to manage through. So, ultimately what happens in the neighborhood is going to be very important for Asia.
But in this week, is the most important thing for the markets in the next quarter definitely the midterms?
So no, I think the most important issue for markets in the next quarter is the type of divergence that we continue to see. I think people underestimate how much divergence has played. Divergence in economic performance, divergence in policy has led to massive dispersion in asset prices. The S&P has outperformed emerging markets by 16 percentage points. Treasuries have gone up significantly by 80 basis points. The Bund hasn't moved. The dollar has appreciated by 5 to 6%. If that continues, that will cause all sorts of tension. So the key issue for markets is to what extent does economic divergence continue? Yep. And therefore, at what point should we start fading what are huge dispersions in asset prices?
Okay, so when are you telling me you're expecting a correction in equity markets?
No, what I'm expecting is we're going to see further divergence. I think people right now are very tempted to put the convergence trade out of U.S. equities into EM, out of U.S. equities into Germany, okay? Fade the dollar strength, fade the 270 basis points of difference between 10-year treasuries and bunds. That trade will come, but not just yet.